welcome to podcast number 10. Woo, number 10.
Larry, how's it been?
Good, 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 good.
Hey, happy Valentine's Day. You're looking beautiful.
Thank you, thank you. You guys are so sweet. It's a good thing you're quite a distance away. I give you a kiss, so all good. Today, let's talk a little bit about investing on your own versus investing through a money manager like ourselves. You can certainly do both, but I think there's some, I don't want to say pros and cons to each, although maybe in terms of you got to pay money managers a little bit of money to watch over, but then the question is it worth it? So let's get into some of the main points. Let's talk about and I don't know which of the two of you want to grab this one first. Let's talk about the security risks of managing your own, like self-custody, storing on different exchanges, things like that. What the average individual has to do versus what we're watching. So who wants to grab that one first?
I'm happy to kick off on my side, and then I'll let you jump into some more detail, B. So, yeah, I mean, I think I agree with you. I think that there's definitely pros and cons, I mean, to each option, and maybe just for clarity, to clarify each option. So one would be to use a money manager like ourselves, where you essentially face us or stewards or a similar asset manager or exchange for that matter as a counterparty versus holding the funds, let's say, on chain in cold storage. So that those for me are two attractive options, both with pros and cons. So I think that holding them on chain obviously has a number of advantages because you're not facing any counterparty. So an FTX scenario or a Celsius scenario or Mt. Gox, I mean, there's a long list of different counterparty failures. And by holding the funds on chain, you essentially remove that specific risk, which is great on the one hand. But on the other hand, what is it? With great power comes great responsibility. So almost in this scenario again, with that independence comes responsibility to attach to it. So you need to make sure that you're on top of your secret and your private key, and that you are being responsible about how you go about custodying your own funds in the blockchain space. And not everyone has the capabilities or the time available to make that investment into the security of their funds to be held on chain. So that's one reason that you may want to look at a money manager like ourselves. So we pay extensive time and resources to our counterparty risk management. So we, for example, will only have a certain amount of assets on any one counterparty, and specifically here I'm talking about exchanges as well as verified custodians. So, for example, I mean, we're familiar with exchanges. You've got Bitstamp and Kraken and Binance, FTX, Mt. Gox, all obviously the dogs in that category now. But there are many good exchanges out there, and I think that's one of the things that we've seen out of this last bear market. At some point, everyone's looking at all the counterparties and saying all of them are the same, and that's not true. There's some really good players in the space as well that I would and I do trust with my funds and with our client funds. But we obviously invest time in identifying who those are. And obviously we can't get it right 100% of the time. So I mean, for example, FTX was one of our big counterparties, but then at the same time we had only a limited exposure to them. And then when there was news flow that came out, we also then reacted to withdraw a large portion of our capital that was on FTX at that point in time. So that's obviously some of the actions that we can take. And then also what we do is we face then pure custodians. So these are not exchanges. So like a BitGo, for example, and then there's a number of other companies that will also do custody. Coinbase is another one, just off the top of my head. So these are companies that are not offering an exchange service. They're just offering a custody service where they're saying, we're just in business to look after your funds. So I really think there is value in having diversification across the different places that you're holding the funds. And yeah, I mean, I can say that we obviously fared a lot better than many of the other competitors in the asset management space in terms of how we manage counterparty risk. And we fared a whole lot better than many individuals that really took some hard knocks through counterparty risk management in the last bear market. So yeah, maybe that's just highlighting some of the pros and cons with those two options.
Well, aren't we, because of the fact that we're looking at all different indicators and segments and exchanges, we're doing this 24/7. We're watching. And so a lot of times we get to see movements, we get to hear things before they actually become public. And in many cases, that allows us to make moves and changes ahead of the curve. And so the fact that we have a team watching over many exchanges, many different types of diversified investments, it's a little difficult for an individual who's not in the business to do that because they have to tend to their job. And so we get to do that. And when you look at some of the different things, whether it was a Luna or an FTX, where everybody had some exposure, we really were able to mitigate tremendously any adverse and negative outcomes for our investors. So I think that's I think that's a pretty good thing that we were able to do. Bilal, what's your thoughts on a little bit of what Graham said?
Yeah, thanks, Larry. I mean, I'm highly aligned to what Graham's shared. Just making some notes as he's talking. I can tell you a funny story about my first days in learning about crypto, pre-RL, pre-Stewards. I think at that time I was still running a Fraser Capital. Might have been 2015, 16, somewhere there maybe. And Nathaniel got me for my birthday my first wallet and gave me some crypto. And he came out. We had a braai, and he showed me, and he set his wallet up and everything. And I had my secret, which was like these 10 words. And what I did was I took a screenshot of my secret, and I had it on my phone, and I just got busy, and and then over the next day, I had a lot of fun things happening for this birthday, and lots of pictures and videos and blah blah. And the phone crashed. Right, the phone crashed. The wallet was on the phone, and the secret was on the phone, and I couldn't I couldn't get into the phone, and I've lost that crypto. I can never get it back. And he often brings that up, that I, I can't. He's not going to give me nice presents because I lose the presents. But I mean, that's a typical example of things that happen to people when you try to look after your own crypto. And they're often, you got to learn in the beginning, and learn how to be careful, and how to back up where you store your private key, and it is a responsibility, and you either if you wanted to store $1 million in your mattress at home, then you have a firearm and you've got a nice alarm system, and you're taking a fair amount of responsibility that you're going to be able to protect your capital. If you're leaving it in a bank, you're hoping that they have sorted out that protection. So in the same way, whenever you are holding your crypto, you've got a lot of control because there's no other counterparty, but you've also got a lot of responsibility that you need to be ready to bear, and you really need to be able to understand the tech of what's going on. And a lot of people lose their money because of silly things like phishing scams, where the same way that people ask you what's your bank account, what's your password on your bank account, you won't give that out because you know what that is. But in crypto, because it's so new and some people don't understand exactly what information they're giving out, uh, they sometimes lose their crypto in a phishing scam. Um, the other important point for me is, what money is it that you're investing in Spectrum or in any crypto fund? I mean, you in with dollars, you keep you keep a couple $100 in cash in your pocket. You've got a credit card that allows you to spend a few $1,000s, and then you would invest your larger amounts of money into products that are working. You don't leave that money lying around. You don't walk around with $1 million in your wallet in your pocket. And unless you're into illicit business, and we don't deal with those clients. Yeah, but what I'm saying is the vehicle needs to be right purpose for the intention of the money. And if your intention is for that money to grow in the safest way, with a long-term view that it's working, then having a manager look after that money is a safe option. So those are my thoughts, just in agreement with what Graham's saying.
All right, let's talk about diversification and asset allocation, right? And again, anybody today can go to any of the exchanges or can go to multiple exchanges. It is time consuming to go set up, as you said, accounts, passwords, keys, um, then to set up your own asset allocation and where you're going to buy. Are you going to, have 5 or 7 different coins? Are you going to have them on 3 or 4 exchanges each? Oh my God, that's quite a bit. And then the most important thing is, how are you going to know when to move and what to do? So when it comes to asset allocation and diversification, um, our team is looking at this all the time, looking at all the charts and all the analytics to make those decisions. I don't know how an individual is going to work all day as a family and other things to worry about. How in the world, and Graham, let me come back to you on this, because I mean, this is something that you're doing all day long, and those allocations and which coins and the weight of the coins and when you're shifting and how you're moving into them. I mean, I don't know. What's your thoughts? I mean, can an individual possibly do it on a while they've got another full-time job?
100%. So that's one of the real value adds that we offer, through the actively managed strategy, and just by virtue of being on chain, that generally means that you're going to be less nimble when it comes to getting in and out of your positions. So typically those individuals with hardware wallets, for example, that they've got their Bitcoin on, that'll be their hodl Bitcoin, right? They're going to hold that through the ups and downs for the long term. And there's absolutely nothing wrong with that. And I mean, I think that everyone should have that, regardless of whether you're an investor into Spectrum or not, because there is that still that value of having that cold storage, your on-chain funds that you're holding without any counterparty risk. There is some value to that. But at the same time, what we're looking to achieve within Spectrum is an outperformance of what you're going to get on a buy and hold basis on Bitcoin or the market in general, for that matter. So, and there's a value add to that as well. And I'm very proud of the fact that we've achieved outperformance versus both Bitcoin and the general market index over a 3-year period, and specifically, reducing the drawdown during this latest bear market. So it's absolutely a value add that I think is very important. And that's really our proposition to investors is have an allocation to crypto. If you are crypto savvy or tech savvy, then have your own holdings off chain. But for that same client, as well as someone that's not tech savvy, definitely look at an allocation to the Spectrum Fund and our other products for all the reasons that I've just mentioned.
Well, Bilal, we're going to conclude with this part. So today's a little bit shorter, but the average person, if you look at least here in the States, it's always managed money, whether it's a pension plan, a profit sharing plan, annuity, it's mutual fund choices, or your broker's doing your asset allocation. So, but again, you do have your Fidelities and Schwabs. I don't know any friends of mine who are managing their own diversified portfolio by themselves at all. But when you come back to comparing just what we've done in, let's say, the Spectrum, and then you compare it to what the average person might have bought a few coins and just put them away. I mean, net of our fees, we didn't just, do a little bit better. we did outrageously better. So, what's your thoughts on? I mean, would you try to do your own, especially in crypto today, which is even more, more volatile than traditional? What's your thoughts? You've done both, so what do you think?
Yeah, so it's again, it's always about purpose. So some people have fun trading crypto. They're hobbyist crypto traders. They like reading about it. They're interested in the tech. They like being cutting edge, trading crypto themselves. Um, keeps them motivated to read the news and be involved. But as Graham said, it's a demanding task to do it professionally. So if you have a day job and you're a hobbyist crypto trader, then allocate the amount of money to that as a hobbyist crypto as a hobby. It's a hobby. So you put your hobby money into it and you have fun with it. But if you're looking for an investment that want a professional investment that's going to give you a stellar return. I mean, Spectrum's in the top three of the world in our view, and so we see that as being the best risk adjusted return. So it's not just return. You can make 10,000% on a particular crypto if you're buying the right coin in a pump and dump scheme. We're talking about buying quality crypto with quality projects that have longevity, that have good teams, that provide a service or a technology which will be useful, and in the long term, that is a risk adjusted safe. No investment is completely safe. Every investment has risk, but on a risk adjusted basis, that is safer than trying to do it on your own. And yeah, so I would say if your purpose is to benefit from the potential of the crypto industry and the potential upside, where Spectrum aims to deliver 500% in the next 5 years, then you know that's where you want to allocate. But I'm also very open to people having a hobbyist allocation to crypto and playing with it and learning with it, because we need more users. We need people to use Bitcoin, Ethereum, and to trade with it, to perform transactions, to build. Both forms of investment are important.
Okay, all right, I got it, and I think some of our viewers will as well. The last thing we want to leave people is whatever you do, you gotta look at this stuff as long term for sure, because that's what we do. We want to take the serious money with the long term view, and we want to see if we can make you 5 to 10 times on that money over the next 5 to 7 years. By the way, I don't know if some of you guys have seen some of the predictions lately. What Kathy Wood, it could go to 1 million. Robert Kiyosaki, Bitcoin's going to go to 500,000, but Ethereum's going to outproduce it, right? What I've also seen is in the very, very short run, you're hearing a lot of people talk about we're getting ready for the big bull, right? Some of saying, hey, but hang on, we're going to do a little bounce first. But I will tell you, I'll call it the smart money, whatever that is, right? There's nobody who is not suggesting that the next 5 years, it is certainly going to outproduce any other investment you could make by multiples. And so that's the key. Whatever you're going to allocate to this, make your allocation somewhere between 3 to maybe 10% of your total portfolio. Stay diversified. Pick a good money manager or 2 or 3, and then let them do their thing for the next 5 years. And you may find that 5 or 10% of your portfolio, it may grow to equal what the other 90% does. So I think all good, and we're excited to be part of your money management group. So, well, fellas, listen, I think it's been great spending some time today. I think this was a good short segment for sure. again, happy Valentine's Day to everyone. And Graham, like we said before, with 3 kids, please celebrate wisely and drive safely.
Thanks, Larry. No, well noted.
Okay.
Cheers,
Hey,
guys.